What did the markets do in October that you ought to be aware of? In this video, we will touch on market performance, the government shutdown, the rate cut, and discuss how you can be planning ahead. This is Trevor Cochran with Reverb Financial. Let's get started. Let's start with market performance. October marked another strong month for the stock market. The S&P 500 gained 2.27%, the Dow was up 2.51%, and the Nasdaq climbed 4.7%. We've now seen multiple months of positive performance, marking the longest winning streak since 2018 for the Dow and the Nasdaq, putting up 6 and 7 months of positive gains, which is pretty incredible. The S&P 500 has also had 6 months straight of positive gains, giving it its largest winning streak since 2021. So the market is red hot, and we are all seeing the results of that, which begs the question, where did all this performance come from? Much of the strength that we are seeing came from big tech and AI related companies like Amazon, Apple, Nvidia, who all reported strong numbers, which has helped keep the market momentum moving in the right direction. Even with some mid-month volatility, it was an overall healthy month for stocks. But keep in mind, a lot of this rally has been driven just by a handful of very large companies and a lot of excitement over AI, which means maintaining a well-diversified portfolio is more important than ever. Let's move on and talk about the government shutdown. On October 1st, the government shut down, marking it as the second longest shutdown we have ever experienced thus far, with no real end in sight. We have an estimated 670,000 federal employees that are furloughed, while roughly 730,000 continue to work without pay. If you combine this reality with the fact that over half of Americans live paycheck to paycheck, we can see that this is a very stressful time for federal workers. For most of us, this situation is a reminder of how fragile financial stability can feel when income suddenly stops, even for hardworking people with good jobs. It's a powerful example of why emergency savings and margin are so important in every financial plan. So while this shutdown impacts federal workers directly, we all need to ask, if my income stopped for a month or two, would I be okay? Now, if the answer is no, make November the month you start building or rebuilding that margin. So we discussed market performance, the shutdown. Now let's review the rate cut. The Federal Reserve cut rates again this month by 0.25%, bringing the target rate down to 3.75 to 4%. This is their way of trying to keep the economy steady while inflation cools off some more. The data that the Bureau of Labor puts out shows that inflation is at 3% at the end of September, and the Fed's target inflation rate remains at 2%. Looking past the numbers though, what does a rate cut mean for you and for me? One, it means that borrowing is a bit cheaper, which is good news if you are looking for a home or considering refinancing. Number two, savings accounts may start paying a little less interest since those higher yields that we have enjoyed are tied to those rates. And number three, we might see a slight tailwind in the markets because lower rates tend to encourage more spending and investing. Overall, inflation is trending in the right direction, and that's a positive sign for the economy heading into 2026. Let's pivot from October and look ahead. What are some things to keep in mind as we plan for the remainder of this year? Now, November is a big month for financial planning. First up, we have open enrollment. ACA enrollment begins November 1st, and many employers are updating benefits right now, so take a few minutes to review your health plan, your HSA, your FSA contributions, and your insurance options. Has anything changed with your family and your health? Make sure those benefits still fit your needs. This is also a great time to double check your life insurance coverage through work and see if it's still enough for your situation. That is something we can help you with here at Reverb as well. Next, take a step back and review your goals. Before the holiday season kicks in, ask yourself, am I still on track with my plan? Do my savings, my investments, my spending habits reflect what I said mattered most back in January? A quick check-in now can save you from scrambling at the end of the year. And for those looking to be a little bit more strategic, there are a few advanced planning moves worth considering. First off, Roth conversions. If you expect to be in a higher tax bracket later, moving some money from a traditional IRA into a Roth before year end can be a smart play. Now, it's taxable, so make sure that you run that move by your tax advisor and get a professional opinion before moving forward. Second, tax loss harvesting. If you have investments in taxable accounts showing losses, selling them can help offset capital gains elsewhere and put you in a good position for tax season next year. And third of all, charitable giving. November is a great time to think about year-end giving, whether that's cash or appreciated stock or through a donor advised fund. Remember, small intentional steps can make a big difference by the time 2026 rolls around. As we wrap up and think about planning for November, here is one last thought from Scripture. Proverbs 21:5 says, "Good planning and hard work lead to prosperity, but hasty shortcuts lead to poverty." Saving is hard work. We all know that. Saving comes with a good plan. So many people want to find the shortcut to their goal. Why? Well, we're all human. But remember, everything that we do that is worthwhile takes effort on our part. So let's work hard and plan well. You can do it. If you found this video helpful, hit that like button, that subscribe button so you don't miss any future updates. And if you'd like to connect over your financial plan, head over to reverbfinancial.com. I'd love to help you out and get you started. Have a great November, and I'll see you in the next one.